polished and smooth, guiding folks like you, making sure you can't lose. You save your pennies, keep your securities tight. No need to worry, he's got you in his side. Secure tomorrow with insurance so strong. Reginald Canal, he'll guide you along. Trust in his wisdom, protect what's yours. Financial security knocking on your door. I met a man, Reginald Canal, savvy and wise. He told me about protection, opened up my eyes. Insurance, he sang, is the key to a better life, covering you, your family, and all the things you prize. Reggie's a financial advisor, polished and smooth, guiding folks like you, making sure you can't lose. You save your pennies, keep your securities tight. No need to worry, he's got you in his side. Secure tomorrow with insurance so strong. Reginald Canal, he'll guide you along. Trust in his wisdom, protect what's yours. Financial security knocking on your door. I met a man, Reginald Canal, savvy and wise. He told me about protection, opened up my eyes. Insurance, he sang, is the key to a better life, covering you, your family, and all the things you prize. Reggie's a financial advisor, polished and smooth, guiding folks like you, making sure you can't lose. You save your pennies, keep your securities tight. No need to worry, he's got you in his side. Secure tomorrow with insurance so strong. Reginald Canal, he'll guide you along. Trust in his wisdom, protect what's yours. Financial security knocking on your door.
Money's scary.
I see a lot of people struggling with how to manage their money.
They aren't keeping track of how much money is coming in and how much is going out. Most kids don't know how to handle money.
I'm a big spender, not much of a saver, and I think if I had seen something modeled differently earlier, then I probably would have a different relationship with money.
I think World of Money gives them that basis, that financial literacy that they need.
World of Money is a youth financial education training institute. It operates Monday through Friday 9 a.m. to 4:45 in July of each year.
We go in the morning, we meet with our classroom leader.
Each day is different and each day has a theme and focus. So some days we'll be talking about banking, other days we'll be talking about stocks and bonds.
I did learn a lot about credit scores,
401ks,
gaining interest on money, making your money work for you,
how to save your money,
checkings accounts and savings accounts,
and how to live a better life.
My name is William and Law. Handling money is a big responsibility and it should be held in the hands of a responsible person. Hi, my name is Rachel. I feel like I just graduated from business school, like real university business school.
Just having role models like that come and share their knowledge with us is one example between, learning, gaining success, and then giving back.
And it's just a straight, long time.
Also, one of the cool things that our students learn is Mandarin Chinese.
The 5 tenets of World of Money: learn, earn, save, invest, and donate.
It's helped me become more aware of how much I'm spending and how much I'm saving and how much I'm giving.
It's more about, yes, you had an opportunity to earn the money. Now, what do you do to improve the lives of those that are around you and, the future generations?
You need to give as your resources, whether that's money or your time, and that's more important than anything.
We have visited the White House about 3 times. Our Young Mogul Board of Directors joined me as I testified on Capitol Hill to talk to Congress about financial education. We've opened or closed the NASDAQ Stock Exchange 4 times. We were on CNBC, we have been on MSNBC, we have appeared on ABC, NBC.
I feel like financial literacy is one of the key components in life. No matter what career path you choose, you will definitely have to encounter finance or any type of financial components in your life, such as, whenever you're making your first purchase for your home, which was discussed during the workshops.
Moguls and young moguls, I dare you to become financially successful.
Miss Lamb grooms us to be ambitious, and I think that the tools that she gives us at World of Money are helpful in making sure that those ambitions can be sustained.
After becoming a billionaire, I will invest my money in charities to build schools worldwide that will teach finance.
It's an amazing program. It's done so much more than just teach me about money. It's taught me about being professional, about working hard, about success.
It's worth the time and worth the energy, and I think that your children one day will thank you for it.
Can you envision a world where you and your family in America and those who immigrated from Africa and the Caribbean could receive immersive financial education and invest in fractional and whole shares of U.S. publicly traded companies? That time has come. Wakeza. Finally, from your mobile phone, you can start investing in building wealth. Wakeza. Just sign up for the Wakeza app and join the Wakeza community to receive ongoing adult and youth financial education from licensed advisors. Wakeza. You become a financially educated and protected investor. Wakeza has one empowering objective: creating financial inclusion and your family's generational wealth for the African diaspora. Wakeza.
Hello and welcome to Planet Wakeza. I am Sabrina Lamb, founder and CEO of World of Money, as well as Wakeza, which means save and invest in Swahili. Here at Planet Wakeza, we use this time to have really impactful and share really impactful information that you can use for your life, to save your life, because contrary to popular opinion, money, business, entrepreneurship is and has always been a major part, a major anchor to the African diaspora and our families. So don't let anybody tell you any differently. So let's get started. So my guest today is expert He's an expert and a financial planner. He is Reginald Cannell. He's president of the Sports and Entertainment Division at Fortis Lux Financial. Prior, he had a variety of roles at HSBC, over a 15-year banking career, which included a 2-year overseas assignment with HBCU's consulting group in Hong Kong, managing HSBC's New York City flagship Premier Affluent Center, that's a center that I want to be in, to record sales results, and starting the affluent African American segment targeting high net worth individuals and commercial clients. Reginald is committed to working with his clients and formulating strategies and to implement them to create generational wealth. He is a founding board member of the Haitian Roundtable, lifetime member of the National Black MBA Association, and he's a member of the board of directors of Valley Arts and Miss Hall's, an all-girls boarding school in Pittsfield, Massachusetts. And Reginald holds a Bachelor of Arts in French, as well as a master's in business administration and international business from Binghamton University. Welcome to Planet Wakeza, Reggie.
Thank you for having me. First time at Planet Wakeza. Thank you for having me, Sabrina.
You're very welcome. So right out the gate, I want to know, what is your definition? Because I'm feeling it's becoming a bit of a buzz term. What is generational wealth?
That's a good question. I think we hear that term quite a bit. I think it's a way that you in your lifetime can actually accumulate funds and assets that not only will survive your legacy, but also, if you're fortunate to have kids or not have kids, but other generations that follow. So to be able to have pool of money assets that can live way beyond your lifetime and continue the family's legacy for financial freedom is how I define generational wealth.
Is there a difference, a disparity between living a financially secure life and generational wealth, or are they cousins, so to speak?
No, there's definitely a difference. I think we have been taught to, okay, I'm going to work going up the mountain. I'm going to accumulate an income, and then I'm going to retire, right? We're living longer. And the mentality was, will I have enough to retire? And so the thought process is, what I've accumulated, will I spend that down to have zero by the time we end our lives, right? That's the first thought. Most people don't even get to that task force. But now, because now we're evolved, we've been educated. We have folks of you who started Planet Wakeza who's educating us and saying, no, it's not just enough to get to retirement. It would be selfish to say we're not paying it forward, to saying I need to sow the seeds to make sure that the tree is blossoming when I pass, but also other generations can have a secure future.
Just to dive a little more deeply on that, is the goal for us to outlast our money, or our money outlasting our lifetime?
I think it's for our money to outlast our lifetime. I think the issue is that's getting to be a bit alarming. I think the younger generation think differently from the older generation, right? The old generation is, I joined a place, I had a 401k, I stayed there, I retired, I had a pension if I was fortunate, I had some sort of retirement savings, I would have a social security, and then I would live in retirement. I retired maybe at 65, 68. I lived maybe to 85, 90. I lived a good life, right? But then you have this younger generation that says, you know what? I don't want to work past 50. So I was saying, do you realize that you will be working shorter period of time than you'll be in retirement, right? And so that generation, I'm more concerned about, to saying, okay, will their money outlive them? But are they thinking about generational wealth, whether they have a family or not?
So thinking about generational wealth, or not thinking about or disregarding, is that, I don't want to appear judgmental, but not to think about your descendants or family or children or community, is that disregarding the power, the financial power of your life?
No, that's a great question. I think some of it is where we're from, right? Some of us were never raised with this mindset of like looking for the future, right? Maybe we were in a survival mentality. Maybe you just had enough to just get by, right? Now you're saying, okay, we're here. If we immigrated, I'm originally from Haiti, so you immigrate to a new place. If you weren't raised with this type of knowledge, you become enlightened. You go through training, organizations World of Money, so our kids can learn that information is fantastic. But now that we know a little bit more information, we say, okay, we look at other families and other races, what they've done, right? They don't play the short game, they play the long game, right? How are we collectively coming together as a family unit and making sure that Johnny and Johnny's kids and Johnny's cousins and even not even just our family, our philanthropic wishes, are we making sure that we're philanthropists anyway, right? Because we tied, we help out cousin Mary. We don't think that, but I'm saying we need to collectively, now that we know, to make sure that we're paying it forward to that other opportunities, whether it's philanthropic side or families have enough, at least a leg up from the very beginning.
Love what you said in terms of it depends on where we're from. I was just saying yesterday that financial education is not one size fits all. And that's the work that we're doing at Planet Wakeza, is to provide the financial education at the entry point of that person. They could be from Haiti, they could be from Senegal, they could be from Oakland, California, but each has a unique experience and an entry point to this very powerful relationship with money.
No, that's a good point. Look, most immigrants, and if you come from a place that's not the US, we're entrepreneurs in nature, right? And so the idea of corporate America, it's not, if I talk about the Caribbean for a second, it's like, that's not, most people are entrepreneurs, right? But with entrepreneurs comes risk. And we know if you're in corporate America, there are things that you get when you're at these places, 401k, you get insurances, you get all these things that when you leave these places, you have some sort of steady income. When you're an entrepreneur, there are things that maybe you've not put in place. And now we know the risk of entrepreneur businesses failing. So if we don't have that safety net, then you have people that are in financial difficulties and their families in financial difficulties. And we can never withstand a shock in an emergency, and then to make sure the family is okay to survive and thrive.
So with the high percentile of those who of Black people in the United States of being uninsured, being protected when life happens, what's driving that high percentile of Black people underinsured or not insured at all?
Yeah, that's Sabrina, that is the $1 million question. And this is an area, and I've been doing this for the past 22 years, that I really feel is one of the major areas that is causing us not to close the wealth gap, right? One is education, right? One is education of, again, I'm generalizing, is when you talk about life insurance, or we call protection planning, we have this thing of like, oh, you're trying to kill me, right? You're trying to, not understanding how other races use that as a major tool to transfer wealth, right? So I think one, in the industry, those of us who are not properly educated in the industry about really selling our clients, and I'm also mindful the Black community has been burned. You have a lot of people who sold products that were not the right products. So you have a group of people that are loyal, but they've been sold the wrong things, right? And so you have that. When you take that aside, is if you looked at after George Floyd, with the amount of deaths that we had, we should have had a bigger transfer of wealth in the Black community. Why we did not is because a lot of the Black families were underinsured, right? And so to be able to explain someone is like, the single clients will say, well, I really don't care because when I die, everybody can sort themselves out, right? And so it's really educating that person is like, this thing, if it's properly explained to you, if you pick the right products and we understand where you're trying to go, there is a death benefit that's tax-free. Then there is a living benefit. It's like things that you can access while you're alive, right? So I think part of the problem, Sabrina, is the education to the Black community about the power, the leverage of how insurance can be leveraged to create wealth for this generation and future generations.
We're absolutely going to get into that. As you've indicated, Reginald Canal, we cannot overlook the emotional misconception some of us have with regarding to protection planning, even estate planning, and with the feeling that someone's trying to kill me. And then, as you said, having been burnt, because that's why I always say to World of Money families, Wakaza families, that you need to vet your financial advisor and their fiduciary duty. They have an ethical duty to provide the product, the service for you that you need that doesn't benefit them. Selling you something selling you insurance for a boat and you don't even have a boat. Right. And then, but so what questions should anyone ask a potential financial advisor to get the answers for themselves, whether that person will represent them ethically?
Right. So we always say, like, we don't lead with products. It should be goals discussion, right? Do I fully understand, Sabrina Lamb, what you're trying to do, where you're trying to go, what are you trying to accomplish? Unless I invest the time to understand, Sabrina, where you're going, I cannot say Sabrina needs X product or Y product. The products are byproduct of the solution of where you're trying to go, right? And so I think not to most people want to quickly get to a sale, but not really understand the product, right? Once we understand the goal, right, and then we have, there's usually a process, right? We want to talk about protection planning first. The average person is very comfortable talking about investments or real estate. This protection area is something that, in case of death, in case I became disabled, right? We understand, like, I have a car, you need car insurance. I have a house, you need homeowner's insurance. But if I told you the best thing, Sabrina, you can do to protect yourself is your income. And how many people understand is that unless I'm able to get up and go to work and actually secure that income for my family, that's one of the biggest risks. But disability, most people don't like to talk about that because you're like, well, that's never going to happen to me. And we know the stats of how many people something will go, whether it's physical disability, mental disability, is the things that we call protection planning. The average person is not comfortable talking about, or they have advisors that can fully explain to them why they need these things first. If you're building a house, you have to get the foundation. So we like to say, all the things you have to do to secure the foundation. You can never start on the third floor if the foundation is not. So the protection planning conversation is protecting. If anything could go wrong, let's address that. And then we're going to first floor, second floor, penthouse, and then the views are amazing.
Well, protection planning, that's not a terminology or a possibility in my grandmother's day. How has protections regarding, the insurance offerings, how has it evolved and why has it evolved over the years?
Yeah, no, that's a great question. So burial policies were very popular, right? I've got, family members, I've got clients, they've got 20,000, 25,000. They said, no, I'm good. I just need just enough to make sure we have a great repast. The coffin's paid for, the sermon's paid for, and they feel if I took that burden off of you, I've done my job. But that's not enough, right? And if you're leaving behind young kids, if you're leaving behind, they don't understand is that salary. Let's just say you have a couple, each are making $100,000 and they're in their 30s, right? They think nothing's going to happen to me. I'm young, I'm healthy. If one person is off that equation, that's 100,000. If that person lived 30 years, that's 100,000 times 30, that family doesn't have that income. Now, what do you think is going to happen to a baby Johnny or little Mary? Ballet lessons are gone. College education is gone. That house is maybe jeopardized because the mortgage is not enough and we don't have enough saved, right? And so are we able to do something to protect you in case something would happen to that income is what we don't understand and prepare for.
Mm-hmm. Mm-hmm. Go ahead, please.
Does that make sense?
Perfect sense. And so this conversation is urgently needed to have, and then action steps, because, I often weep actually for people that go through some sort of calamity in United States, around the world, and often have to rely on outside agencies or governments who really don't have the resources to restore you to where you were, or even to support you where you are now. And so and this, all what you're saying applies to wherever you are in your life journey, whether you are a young adult, right? Married, retiring, a senior. What should someone think about? Let's go through the different life stages. What should someone think about in terms of everything that you're aware of? If they're in their 20s, for example, they've already graduated college, they've received their first their job offer and accepted. What should they start thinking about now? And anyone and everyone in the chat, please post your questions.
That's a great question. What do you do in your 20s? We get that a lot. And so we like to work with people who are just starting out, people who are mid-career, and people who are retired, right? And so the first thing I would say, especially in the diverse communities, is issue of shame, right? So there's an issue of, I may have done some things wrong in the past and I don't want to address it. And so we always say, whatever you did yesterday, that's yesterday. If you're willing to engage and go forward, we're willing to address that. And we share personal stories, so we get over the shame conversation. In your 20s, you're blessed, you've graduated, you're starting your first job, you may have school loans, right? So the intent is, you know what? Without those school loans, you probably wouldn't be able to go to school, right? And so we need to make sure that the school loans are fine. If they've joined a company, most individuals don't understand those benefits, right? Working with a professional to saying, okay, these are the benefits. Most HR professionals will say, oh I can't understand why people are not taking advantage of those. Part of it is they don't understand those benefits. And two is, some young professionals say, well, I'm not going to be here long. I'm not going to do the 401k. And then they're there 5 years. And they've missed on if there was matching gifts. So one, understanding your benefits. If there's a 401k, make sure that you are actually taking advantage of the 401k. And whatever the match is, let's say the company says, I'm going to match 3%, 4%, 5%, always take up to the match. That's what we always say, right? And then the concept of saving. In a habit of systematically saving, right? Whether it's $20, $10, whatever you make every paycheck, to be able to say, I'm going to take $50, $100 away and put it away for a rainy day, because something's going to happen, right? The pandemic may happen again, or something may happen. There's nothing to tap. So getting people to, then the important thing, Sabrina, is this idea of a budget. Most people can't tell you what they need per month to live on. So one of the first exercises we do with our clients is saying, we send them a budget template, saying, complete this, to saying, what do you need per month? I make $1,000 a month. Are my bills $500, $600, or $1,200? If you make $1,000, your bills are $1,200. That's why we see people go into credit card debt, right? Because there's just not enough to live. But if you make $1,000, my bills are $500. What are we doing with the $500? That's when we say we understand your goals, then we save some, and then we're addressing protection planning.
Okay, let's move on into in our 20s, and you just were in your 20s. Now you're in your 30s. What should you do right now?
Yes, and I like the question someone posted, Natalie, about if you're middle-aged. Wherever
we're getting there. We're getting there. And we're in the 30s now.
we're in the 30s.
We're coming to you.
In the 30s, you would have got a handle on your budget. You would have an emergency fund, right? So an emergency fund is, it depends if you're conservative or not. 3 to 6 months worth of your income in the bank, or 3 to 6 months worth of your expenses in the bank. To saying, if something were to happen, there was an emergency, I lost my job, can I maintain my bills for the next 6 months until I find another job, right? So I think the understanding your budget in the 30s, you would have some plan on a student loan repayment plan, credit cards, getting.
Wait a minute, I thought Uncle Joe was going to take care of that.
No. Uncle Joe said he's not going to take care of that. So, yeah. And then the other thing is getting a handle on the debt, right? Is there a plan to now, get rid of the debt? We want to make sure now we are eliminating the debt, right? Because, in the 30s, most people are very consumed about their credit score, which is great. But if you ask the average person what is their net worth, they can't answer that question, right? And the net worth is you take a piece of paper, you put a line in the middle, you put an A on the left, which is assets, you put an L on the right, which is liabilities, and you list everything on the left. How much I have in the bank? Do I have a house? What's the equity in the home? All of those things. And on the right is how much student loans do I have? Do I have a mortgage? Do I have a credit card? You subtract the left side from the right side. And if it's a positive, great. If it's a negative, okay, what are we doing to fix that? And then we hope our clients increases their net worth 10% per year. So the exercise I would give everybody is stop focusing on knowing your credit score, which is very important, but focus more on your net worth.
Well, as you have aged from your 20s to 30s, should you also review the insurance protection that you have that may not be suited for now that you're in your 30s? And yes, we're coming to you, Natalie, for the 40s and the 50s. Should you, every life milestone, should you review and update, the kind of protections you have?
That's a great point. Again, the effectiveness of insurance is also the person is younger, right? When you're younger, the rates are lower, and then health basis. So insurance is based on ratings, right? So there's usually like 5 or 6 classes, and then there's something called tables. So you're in the best fitness, you're in the best health, you're an ultra preferred. You're a second, you're a select preferred, right? And then standard. Standard is considered like you're a smoker. And so when you're young, putting these things in place where one, you may have the disposable income, you're younger, the insurance is cheaper, and then you allow that, the first 2 years, really, you're paying the death benefits. And then this is more a middle to long-term play, right? And so we have to say, like, there's buckets you should be setting up, going up the mountain. You have a bucket that's a savings account. You have the bucket that is, okay, maybe I'm thinking about potentially investing in a first apartment, right? Getting a real estate, but then getting the insurance in place, understanding the difference between term insurance and whole life. And the one thing I'll say about that is
we're getting there. Yes. Mm-hmm.
Yes. Okay, so you want to go to the 40s and the 50s?
Now the 40s and the 50s. Okay. Natalie's saying about time you got here.
40s and the 50s. We're starting to think about well, how long am I going to work until? Look, I like to have that conversation with my 20-year-old clients about, like, okay, when do you think you're going to work until? But the 40s and 50s, you're really thinking about, am I at a place right now I'm going to stay till 65? When do I take Social Security? I'm thinking about, okay, how much money I have saved up? If we did the cash value life insurances early on, how much money is there already? What is the plan to access those funds, either to buy a place, buy a second investment property, making sure that if you're blessed with a family, the kids are secure. So you're really starting to think about where am I going to be? Where am I going to live? What's my health? What's the nest egg I have? And sort of what we call going down the mountain, which is as dangerous as going up the mountain, right? Because you're now going to go into the distribution phase of life. Okay, it's never too late.
It's never too late. Yes. And again, in each stage of your life, are you saying that you should review the kind of protections that you have because we're focusing on insurance, different insurance options, so that your life is protected? What is the difference between, and is that what you're saying, Reginald Canal? Okay. So sure. What is the difference between whole life insurance and term life insurance?
That's a great question. The only concern I have is, look, we're in an age that everyone can Google everything, right? And everybody's their own doctor. So I think we go on the internet, we Google these things, and we have a friend, right? A friend who's not licensed, a friend who's not an expert, right? So I guess the biggest advice I would have to the Planet Wakeza visitors and tribe is, We go to a doctor for medical advice. We go to an attorney for legal advice, right? In this business, you have to go to an expert that knows this field, right?
Licensed, right?
Licensed.
That word is often, so and so has a million followers. Licensed financial advice. And why is the license imperative?
Right. One, there was an education component of that. Is that okay? You've gone through some education. There's some testing requirement to get these licenses. You got to be tested, and then also there's these. Depending on the state, there's state requirements, right? You have to be licensed for where the client is in these various states. And a lot of us professionals are licensed in various states across the country. So one, license. And so you also have people on the internet who are saying, buy term and invest the difference, right? And so these people who are giving that advice, a lot of them have multiple whole life policies, right? So they're giving, I always question folks giving folks of color advice when they're not doing the thing that they're giving advice about, right? And so term is like renting an apartment. It serves a purpose. It's inexpensive. It's not an asset. You can't put it on the asset. It's usually, I'm starting out. I don't have a lot of money. I need some protection. But only 1% of people die in, I've got a 20-year term. I'm committing to a certain amount per year. You don't make those payments, the policy's lapsed, right? I get a policy at 20 years old. It's a 20-year policy. I'm now 40. I didn't die, God willing. At 40 years old, that same policy is so expensive that most people don't renew those policies, right? Mm-hmm. So somebody's been putting this money for 20 years. They didn't die. It's kind of worthless, right? But if you do the term, there is a systematic approach to saying every time I got income, every time I got a raise, we need to convert some of that term insurance to permanent insurance, right? Permanent insurance is, with insurance, there's a death benefit that's tax-free. God forbid I died, my families get, or beneficiary get a check tax-free. Whole life insurance, which is permanent insurance, is a little bit more, but is an asset, right? So you can do a lot of things with the whole life insurance. One, there's a death benefit. God forbid I died, tax-free. Two, insurance is one of the things that's not tied to the stock market. The average person has their 401k, they have an investment account, they have everything tied to the stock market. And if the stock market goes down and I retired, I need money, you're going into an asset that's already down. You're not allowing that to come back up. So the reason why we have clients put a bucket of cash value life insurance is you're building funds where that you are able to tap and then leverage, right? And so we believe that money should be in motion, right? So the 1%ers are borrowing against themselves, right? So this is a level of sophistication unless you have someone who's educating you. And are you committing to educating your clients over multiple meetings of like what these products are, how to use them? So we're not telling you, Sabrina Lamb, what to do. We're explaining to you and saying why, Sabrina Lamb, we should have cash value life insurance in your investment strategy, in your financial strategy, in addition to the 401k, in addition to the real estate, in addition to one more bucket is the cash value life insurance.
And right? Where you are in your life journey.
Correct. And in your budget journey as well, right? And so per your goals, right? And so this is why it fits into that. And so hopefully I answered your question.
So is there anything, it's breaking news here at Planet Wakeza that Reginald Cannell, expert financial advisor, would say to our listeners that often you don't hear, that you think is just so, you need to know this right now.
Yeah. So when I was in my 20s, first starting out in banking, my friend's cousin was a life insurance broker. And, it was sort of like help my cousin out, and a lot of people have gotten their first policies because they're trying to help somebody in their fraternity, their sorority, someone, right? We took the policies. We didn't really understand why we took the policies. We paid $50 a month and we went on our lives, right? I would say urgently, if we in the diverse community, in the Black community, fully understand the power of insurance, how this can help us close the wealth gap, right? So I love to try to solve world hunger, but there's one step you can do to say, let me understand this. Let me work with a professional to understand this. This will be a game changer for your family, your retirement plans, how to leverage, how to create generational wealth. Other races use this and understand it, and either we're being told the information, and I really question the people on the internet who are giving this advice, and it's almost like, we need to be given good advice, and we need to work with credible professionals.
Right. And the other reason why I always stand up and yell that the person that you're receiving advice from is licensed is because some financial areas of financial industries are regulated. Insurance is one of them. Okay. Investing is another. And so that's why that person has a fiduciary and ethical duty to provide you information where you are, and everyone, the different people that are here with different goals, different priorities, that you have a unique circumstance that you need to get the information per your circumstance. I guess the final category of person before we conclude, we've learned so much here today with Mr. Reginald Cannell, is what about the category of person that does not have any children or any so-called beneficiaries? How can insurance benefit their philanthropy and benefit, they leave their a policy, for example, to their HBCU? How would that work?
Yeah, no, that's a fantastic question. I get that question quite a bit. I think I just want everyone to be clear is that we're not here to saying this is an insurance push, right? So I think what I want to be very clear about is and I say I'm sort of generalizing, right? And so the sort of Planet Wakeza followers and tribe members is this insurance conversation is not in our mix, right? So we're saying in the buckets you should have going up the mountain, I want you to have a bucket that's an insurance bucket, but it's a bucket that's a whole life conversation of like how to leverage that bucket, right? And so it's an emergency fund, it's a 401k or 403b, it's real estate. A lot of us don't have that fourth bucket and understand the importance of how that bucket can really catapult your life, right? And so the person who's single, once they understand is that there is a living benefit, right? So one, on the death benefit side is there's family members. To your point is, okay, if I don't leave it to my family members, there is a church, there is a financial cause that you can leave that creates a philanthropic legacy. Then there is this living benefit saying, okay, I understand a 401k, like I'm deferring those taxes, right? I'm putting money away. And if you told the average person, if you wanted tax deferred, tax free, or taxable, most people say I want tax free. But most people don't understand what is the strategy to get tax free. So that person who's single, this is something that they can accumulate funds to use as another stream of income at retirement. They can use that becoming your own bank. I can borrow against it. I can leverage it to buy real estate. I can leverage it to do the things that I want. So the person who's single, this is as important as the person who's committed in a relationship and has a family. Did that answer your question?
Yes, and I need to ask you a messy question.
We like
and this is not often talked about. Talk about the urgency of married couples or what you call common law partners to get on the same page with regard to financial security in whoever you're living with under the roof. Because a friend of mine told me, and he's a licensed financial advisor, said that the husband did not want the wife. He said he didn't want the wife's, if he passes away, he didn't want the wife to benefit from, everything that he was leaving behind if she was to remarry, because he didn't want some other joker benefiting from everything he's done in his life financially, even though he's no longer on the planet. You would say what? Because my friend said he couldn't tell the wife, but this was what was happening. This is the messy stuff.
Right. Right. No. It's look, when you're talking about families and relationships with money, I'm going to answer that question in a second. I am finding very enthusiastic young couples who are getting together that they're talking about finances and money before marriages. There's a couple of clients that I have who are doing prenups, which is really, you think, oh, only for celebrities. So that is an interesting conversation, that they're each individually trying to get their houses in order, and then they know that they're going to combine forces to do that. But going back to your question, some couples manage finances separately, right? Or I have a joint account, I put my money in for the rent, you put their money. Some of them do everything together, right? And then your point is also, that's a whole nother podcast, is about the estate planning, right? The wills that we don't have, right? There are vehicles that you can direct. We tell everybody, check your beneficiaries every year. And you can direct in terms of like, okay, if I pass away, you can control from the grave, right? So there are things that you can do with a licensed estate attorney that you can control funds if I'm not there, right? And so look, the person who has that mentality is going to have that mentality, right? Not everybody thinks like that, but most couples believe like, okay, if I'm not around, I want to make sure the family's protected, that the lifestyle will continue, they're not going to lose the house, the kids will be educated, my philanthropic wishes are met. I see that less what you just explained, but it is a thing. I'm not going to lie and say it's not a thing.
It is a thing. Mr. Reginald Cannell, how can everyone reach you?
No. So first of all, let me say thank you for having me. I would say LinkedIn, Reginald Cannell. If you go on LinkedIn and put in my full name, that'll come up. Send me a message, and then I can follow up with you there. So I'm happy to. The only thing that I ask is serious conversations. At this stage of the game, we're very blessed that we have a referral business, and the clients refer their friends, and if I have an initial meeting and I say, Sabrina, this was a great meeting, and it's not a fit for us, and I feel like that person's not ready. If you didn't do the thing, you made mistakes in the past, and you're ready to have that conversation now, we are going to engage 100%. If you're not going to do the work, don't waste our time, because there's so many families who are enlightened, who want the education. We're going to engage. So serious inquiries only. When you want to engage, we'll engage. It's never too late.
That makes a lot of sense, because you see your role as teaching more so than telling. Is that correct?
We say we inspire to be your CFO. Like, once we understand, we're going to open the hood. It might be a little messy for you. Like, we talk about confidentiality, right? Because we know a lot of people. We know a lot of high profile people. We have a lot of teachers to high profile people, right? And so one is the confidentiality. Like, we do not discuss people's finances. And two is eliminating the shame. Sabrina, you may have done things wrong in the past. We're not here to question your mistakes. We're just here, Sabrina, what are we doing going forward? We engage and saying, we understand we weren't born with this. We don't have this knowledge. And so I invest in the time, because not to say a Black person has to have a Black advisor. There is a cultural thing to say, I understand I'm an immigrant. I understand we never had this. I understand we like to spend. Why are you spending, right? Sometimes we can't do the work. You're spending because there's something else you need to fix. And then we refer you to somebody else to fix that. Then there is a cultural thing. We know what we need to fix. And then we rock and roll and help you close that wealth gap and create your generational wealth plan.
Putting you on the spot a little bit, in closing, could you share a message regarding the urgency of the financial empowerment within the Haitian community in Creole?
Oh, in Creole. Sak pase. Zami mwen, mwen fier de pays nou. Mwen konnen nou kounyen nou nan difficulté, but paquet haïtien qui bien, qui perdu, qui quitte pays, nous pas qu'à laguer, nous pas qu'à quitter pour nous mettre men nous ensemble, pour ensemble nous comme haïtiens cap aider Haïti. Nous pas besoin moun aider nous c'est professionnel, nous ka aider tête nous. OK? So, Kembe ferme, n'a pide Haïti, nous pas besoin oublier.
Long live Haiti. We have been joined by Reginald Canal, the president of the Sports and Entertainment Division at Fortis Lux Financial. Reggie, thank you so much for joining us here on Planet Wakiza.
Thank you for having me, and I wish to have you back.